In today's show, we'll be breaking down the latest Bitcoin technical analysis as Bitcoin hash rate hits a new all-time high. And quoting Max Kaiser, fiat money leads to war, Bitcoin leads to peace. Fiat money monetizes war, Bitcoin monetizes peace. Fiat money is hell, Bitcoin is heaven. Choose wisely. Preach. We'll also be discussing Hong Kong embraces stablecoin issuers, as well as BlackRock updating their Bitcoin ETF, adding 5 Wall Street firms, as well as Bhutan's DHI to offset halving effects with Bitcoin mining upgrade. I'll be breaking this down for you, as well as Crypto Analyst says Bitcoin will continue to rise, and 2024 is a hell of a bullish year. Preach. Also, Bitcoin's going to $1.9 million per coin because of this specific Ethereum disaster. I'll be breaking it down for you. We'll also be taking a look at the overall crypto market. All this, plus so much more, in today's show. Now, happy TGIF. Let's freaking go. Welcome everyone to the stream. Special day here. It is episode number 1600. So make some noise for that. Not many podcasts in the Bitcoin space, 1600 episodes deep, just saying, bringing you the news each and every day. But anyways, fam, if you're new to the channel, important, smash the subscribe button to receive daily premium crypto news alerts every day, just like this. Also, pump that thumbs up if you're enjoying today's content, as it helps out tremendously with the YouTube algorithm. The goal is to get this channel to 100,000 subs alongside a $100,000 Bitcoin price action. And today is a very special day. It's pod episode number 1600. This is April 5th. 2024, Bitcoin halving right around the corner. Let's kick it off with our market watch, as we do each and every day. We got Bitcoin trading at roughly 67,800, Ether trading just above 3,300, XRP, Cardano, AVAX, all the major alts correcting and in the red. And checking out coinmarketcap.com, we're sitting on a 2.52 trillion market cap with 106 billion in volume for the past 24 hours, with the Bitcoin dominance back on the rise. Respect at 52.8% as the ETH dominance continues to decline at 15.8%. Now, how high do you think this Bitcoin dominance will go for this cycle, and how low do you think the ETH dominance will go, or do you think it'll bounce right back strong? Holla at your boy. And checking out the top 100 crypto gainers for the past 24 hours, we got Near up 11%, Ton up 8%, ZEC up 7%. Below that, Neo, INJ Core, and BCH. Now, which alts in particular are you guys most bullish on for this bull run? Holla at your boy. And checking out the crypto bubbles to get a visual perspective, safe to say 90% of the alt market is bleeding and in the red. Oh, just updated a little bit. Safer to say maybe 80% of the market correcting and in the red. And zooming out on the monthly, we still got some respectable gains overall, with the majority of them being the meme coins. And checking out the crypto greed and fear index, we're currently rated a 79, back in extreme greed. Yesterday 70, last week a 79, and last month a 75. We always watch this metric because the higher this number goes, the more likely of a correction. And checking out the Bitcoin halving countdown, the estimated halving date scheduled to take place on block height 840,000, which may land on April 19th or maybe even on 420. Happy 420, fam. That means there's only 13 days left until the most significant event that occurs in crypto, only every 4 years. If you're looking forward to Bitcoin halving 2024 in 13 days, holla, let me know. And checking out the time chain calendar. And yes, it is Satoshi's birthday. You get a notification here. Respect and happy birthday, Satoshi. Satoshi, it's your birthday. That's right. You can currently trade $1 for 1,480 Satoshis. And the market cap of Bitcoin in particular is currently sitting at $1.33 trillion. But anyways, fam, let's dive right into today's Bitcoin technical analysis. Check out the charts where the price action is likely to take us next. Here we go. You're looking at the Bitcoin 1 hour chart. Bitcoin shrugged off U.S. inflation signals April 5th amid fresh excitement over future institutional investment, institutional FOMO. Let's go. Data from TradingView showed renewed Bitcoin price support, pushing Bitcoin to 68.6 after the Wall Street Open, currently circling 68 Gs. Bitcoin appeared to gain in tandem with the news that the world's largest asset manager, BlackRock, has added major U.S. banks as participants in its spot Bitcoin ETF. The names listed in the filing shared online include Goldman Sachs, Citadel, UBS, in Citigroup. Let's go. Quoting Bloomberg analyst Balchunas here, takeaway, big time firms now want a piece of the action and or are now okay being publicly associated with this. You're damn right. Now, Balchunas suggested the developments were likely a result of the ETF's mega flows / success. The 9 newcomer products held over 500,000 biddies between them as of April 4th, not including assets in the newly converted ETF, Grayscale Bitcoin Trust. The BlackRock narrative served to protect the Bitcoin price action from the latest U.S. inflation signals. These came in the form of above expected employment data, suggesting the Fed would have no more room to keep the interest rates higher for longer. And the latest data from the CME Group's FedWatch tool showed the odds of a rate cut in 2024 being pushed back further towards the end of the year. Now the chances of a June cut were just over 50% at the time of this recording, down 10% from earlier in the week. And quoting Dan Crypto Trades, that's everything above us filled. Some still of those orders below, but as I mentioned in the previous tweet, we did fill a lot of them. Us to take it from here, especially now the U.S. market has opened. So I think they're referring to the CME future gaps being closed, which is a good indicator we could ascend back up. Now, further data from monitoring resource CoinGlass shows significant sellers line them up beyond 69 Gs. Still the focal point of the current price action. 69 Gs, baby. Quoting Jelly here, break 69,000, all bets are off. Jelly noted the Bitcoin succeeded in forming a higher low on the hourly time frames, potentially setting the pair up for upside continuation. And breaking news just in, Bitcoin crushes out yet another new all-time high on the hash rate. And as you know, Bitcoin price follows the hash rate. So when we're breaking out and the fundamentals of this strong, it's just a precursor of what's about to happen to the Bitcoin price. And quoting the high priest of Bitcoin, Max Kaiser, fiat money leads to war, Bitcoin leads to peace. Fiat money monetizes war, Bitcoin monetizes peace. Fiat money is hell, Bitcoin is heaven. Choose wisely. And if you guys are on X, make sure to retweet this to get some traction and show the show some love. Again, this is pod episode number 1600, so it's kind of a big deal around here, if you know what I mean. Let's dive into our next story of the day, discuss the latest with Hong Kong and stable coins. And also, as I shared in the other episode, I think it was yesterday, Ripple also announced launching a stable coin backed by the US dollar. So here's the latest out of Hong Kong. And a move poised to accelerate local Web3 adoption, Hong Kong ZA Bank announced it will offer dedicated banking services for stablecoin issuers. And according to the announcement, April 5th, the Hong Kong-based virtual bank is opening up security for fiat reserves, which issuers can use to back digital assets. Stablecoin issuers will also have access to banking services such as fund transfers, payroll management, and various deposit options. Now, Devon Sin, interesting name, the alternative chief executive of ZA Bank, said the institution was or has unwavering support for the Web3 community. Quoting him here, with these new services, we are directly addressing the unique challenges faced by stablecoin issuers, ultimately promoting growth and stability within the Web3 economy. Now, generally, for stablecoins to maintain their value, the issuer will need to securely store an equivalent amount of fiat currency, such as dollars and fiat reserves. This ensures that the hodlers can always redeem their stablecoins for the equivalent amount of the underlying fiat currency. However, managing these reserves securely have been challenging for stablecoin issuers, hindering wider adoption and creating a major need in the greater Web3 community. Now, ZA Bank has been actively trying to involve itself in Hong Kong's burgeoning Web3 scene. In 2023, it reported over $1 billion in transfer volume from clients in the Web3 space. And in May 2023, it announced it would begin offering retail virtual asset trading in its administrative region, one day after the Hong Kong Securities and Futures Commission said it would start accepting retail virtual asset trading platform license applications. The bank has since reportedly secured more than 80% of the client banking needs to the VATP in Hong Kong. It also said it worked to onboard more than 100 Web3 companies in its efforts to push for local adoption. And in December 2023, the Hong Kong government announced it would oblige stablecoin issuers to obtain licenses. According to a consultation paper from the Financial Services and the Treasury Bureau and the Hong Kong Monetary Authority, the criteria for obtaining such a license will entail full backing of all circulating stablecoins with reserves at least equal to the par value. So there you have it. And speaking on the topic of Hong Kong, we also know they're going to have some spot ETFs being launched soon. They're trying to usher this, make it happen, since the ETFs have officially went live as of January 11th here in the States, and their kind are going to be a little bit different. And we also could anticipate some spot ETFs being launched out of El Salvador, Bitcoin City. Let's freaking go. But anyways, fam, let's dive into our next story of the day. Here's the latest with BlackRock, the world's largest asset manager. They just updated their Bitcoin ETF and add 5 Wall Street firms, as we touched upon a little earlier. Global asset manager BlackRock updated its Bitcoin ETF prospectus April 5th today, adding 5 of the big Wall Street firms as new authorized participants. New members include ABN AMRO Clearing, Citadel Securities, Citigroup Global Markets, Goldman Sachs, that's where Gensler comes from, guys, and UBS Securities, according to the document amended by BlackRock's S-1 registration statement with the US SEC. That's right. And among the previously authorized participants in the ETF, they're JP Morgan Securities. That's right. Jamie Dimon is bullish on Bitcoin, even though he bashes it every public opportunity he gets. Also, Jane Street Capital. Isn't Jane Street where Bankman-Fried and Caroline Ellison fell in love? Crazy. And MacArthur Capital, I'm probably slandering that name, but anyways, and Virtu Americas. Authorized participants play a crucial role in the Bitcoin ETF operational mechanism, as they can create and redeem shares of an ETF, which involves exchanging ETF shares for a corresponding basket of securities that reflect the ETF holdings or exchanging them for cash. And according to Bloomberg analyst Balchunas, the new additions indicate the big time firms now want a piece of this action and are now okay being publicly associated with it. The SEC's position on the cash creation and redemption mechanism for the Bitcoin ETFs was primarily directed at mitigating market manipulation risks associated with transactions. The cash mechanism entails that the new shares of the Bitcoin ETF will only be created or redeemed through a cash transaction, in contrast to the traditional in-kind model, where market participants handle the underlying asset directly. This approach was developed to prevent intraday price manipulation, and according to initial proposals by asset managers like Hashdex, following the SEC's guidance, other asset managers, including BlackRock, ARK Invest, and Grayscale, have incorporated this mechanism into their filings. The Bitcoin ETFs witnessed a spike in trading volume in March, reaching 111 billion, while some analysis suggests the product's demand is cooling back down. BlackRock's iShares Bitcoin Trust continues to dominate trading volume and assets under management, and following the Grayscale and Fidelity funds, according to data from BitMEX Research, BlackRock's IBIT assets reached a whopping almost 18 billion as of the first of this month in April. That's a pretty big deal, because this is less than 3 months they have acquired 18 billion. Insane. Over a quarter million Bitcoin already. Over 250,000 Bitcoin acquired by BlackRock family. And I don't think they're slowing down anytime soon. So yeah, BlackRock literally surpassed MicroStrategy, which was the first publicly traded company to put the biddies on the balance sheet. And I think they adopted Bitcoin back in 2020. So that was 4 years ago. So just for some perspective, BlackRock just achieved in less than 3 months what it took MicroStrategy 4 years to achieve as far as acquiring that much Bitcoin. And it's mind-boggling. Right now, MicroStrategy already controls over 1% of the Bitcoin supply. BlackRock already controls over 1% of the Bitcoin supply. And that's just 2 companies. Mind-boggling, right? But anyways, fam, next story of the day, let's dive right in. Pump the likes to pump the stream, show some love. We have the nation of Bhutan. They're very bullish on Bitcoin, as we've been covering here in the news. The latest headline reads, Bhutan's DHI to offset the halving effects with the Bitcoin mining upgrade. That's right. The Kingdom of Bhutan's sovereign investment arm and its Bitcoin mining partner, Bitdeer Technologies, will increase their Bitcoin mining capacity to offset the potential impact of the mining rewards reduction after the Bitcoin halving. Now, Druk Holding and Investments, which is DHI, the investment arm of the royal government of Bhutan, and the NASDAQ-listed Bitdeer reportedly announced they will invest in increasing their mining project's capacity 6-fold. What is that? 600% or 6x ahead of the halving. Let's go. Now, Bitdeer's chief business officer said the planned upgrades will raise Bhutan's mining capacity by 500 megawatts by the first half of 2025. Let's go. This would increase the Himalayan kingdom's total mining capacity to 600 megawatts. The funds needed to introduce new hardware for the upgrade will be taken from the $500 million fund the duo announced last year. And on May 3rd, 2023, the two entities announced the creation of a closed-end fund valued at $500 million, 500 million. That's right. Bitdeer chairman Jihan Wu said the time their company would work with DHI to use Bhutan zero-emission energy to support blockchain technologies. Wu said the fund would help develop international stakeholder networks that could help Bhutan's technology sector. Now, Bhutan's DHI, which manages roughly $3 billion worth of assets, had quietly grown a crypto portfolio before it brought to light the bankruptcy proceedings of crypto firm Celsius and BlockFi. Interesting. And as Forbes reported, they highlighted the DHI plays millions in crypto and was the customer of the two bankrupt companies. Now, local reports highlighted that Bhutan has been using hydropower to mine Bitcoin since 2019, when the price was only 5,000 per bitty. Now, while the two companies are preparing to offset potential losses after the Bitcoin halving, others believe that the halving of Bitcoin rewards would not affect profitability. We have Laurent, the CEO of liquidity firm Akron Trading, said the mining rewards are going to be compensated by the increase in network fees. And BNB Chain senior solution architect Jimmy Zhao believes that Bitcoin-based non-fungible tokens could also help with miner profitability after the Bitcoin halving. As of February 2024, we also have crypto asset manager Grayscale estimating that the Bitcoin ordinals generated over $200 million in transaction fees for the miners. Good Lord, I guess the miners must be loving those ordinals. That's a pretty substantial number. But anyways, fam, let me know your thoughts on the Kingdom of Bhutan doubling down to, actually, I should say 6-timing. I don't know the word for that. I can't say double down, but to 6-time their mining capacity coming up for the Bitcoin halving. Pretty lit. Obviously, mining is a very profitable sector. The miners have been doing quite well over the past few years, even during the bear market. And we know as the Bitcoin price continues to increase, even though the awards or rewards get chopped in half every 4 years, with the price going up, everything offsets itself, and definitely bullish for the entire crypto sector. Just saying. Anyways, fam, let's continue with the news. I still got a lot to share with you guys. We discussed the latest out of the Kingdom of Bhutan. Now let's discuss this 100,000 target, as high as $1 million, actually. And then we're going to dive into a brand new $1.9 million prediction by Luke Broyles. And it's actually interesting because it's going to break down why Ethereum could be disaster prone and could drive the Bitcoin price to 1.9 million per coin. But first, let's discuss this first one. Crypto Analyst says Bitcoin will continue to rise. Send it. That's right. So a video posted on X, Davis revealed that 2 other events besides the halving will push the bull market further and cause Bitcoin's price to keep rising. For the first, he highlighted that the stock market performs positively 83% of the time in an election year. And shout out to Lark Davis on this. I remember Lark, when I first got into crypto, he was referred to as the crypto Lark. Now he's using his name Lark Davis, but he's a good content creator. Respect to Davis. Anyways, while recognizing that this factor usually pertains to stocks, he noted Bitcoin's become part of Wall Street and further claimed that Bitcoin is moving in line with traditional markets. Therefore, the Bitcoin price, like the stock market, could continue to react positively ahead of the U.S. election in November. The second event he mentioned is a potential cut in interest rates based on Goldman Sachs' prediction. The investment bank predicted there will be 3 rate reductions this year, with the first likely to come in June. This means investors will have more capital to invest in risk assets like Bitcoin and other crypto assets. An injection of more liquidity into the crypto market could potentially spark a remarkable surge of the Bitcoin price action. This is evident in how much the flagship crypto's price skyrocketed following the launch of the spot Bitcoin ETFs, which ushered in new money from institutional investors. Now, crypto analyst Plan B, creator of the Bitcoin stock to flow model, also showed why fears of a short-lived bull season may be unfounded. According to the analyst, the Bitcoin top will not come until sometime in 2025. And interestingly, he predicted the Bitcoin could rise to 1 million per coin at the peak of the bull market. That's right. We can see as high as 1 million per coin in 2025, according to Plan B. In fact, I covered this prediction the other day on the podcast, so be sure to check it out if you missed it. Meanwhile, Plan B stated that Bitcoin is rising to 100,000 and even higher this year, and it's inevitable. Let me know if you agree. Do you feel 100,000 Bitcoin price action this year is inevitable? Holla, which aligns with Davis's prediction that 2024 will be the bullish year for Bitcoin. The analyst also tried to allay fears about Bitcoin's price action, remarking that the sharp price corrections are normal and even in a bull market, and doesn't mean the bull cycle is over. That's right. This bull cycle is not even gotten started, in my opinion. Like, in the sense, we hit 69 as the all-time high in 2021. We're currently just under 69. Wait till Bitcoin rips and surpasses 100,000. That's when you guys are gonna be like, whoa, Nelly, I should have stacked more sats while I could. Exactly. And you still have the opportunity to do so. You got Bitcoin sub 68,000 right now. So seize the moment and take advantage of it, because most likely proceeding the halving, things are going to get crazy. I guarantee you that, because every cycle that come before us post halving is when the fireworks truly begin. I'm just saying. And I know I'm preaching to the choir here, fam. Respect to Fresh. He just gifted 10 memberships to the channel. So congratulations to Gray, the Super Cool Bros, S. Dot, Jonathan Wong, OG Backroad Crypto Bootleg, Raul Fibonacci. What up? Worky, Rod, and Matt Ski, and Dogan. You've all been hooked up with the MicroStrategy membership of the channel on behalf of Fresh. Keeping it fresh and lit, as he always does. Respect Fresh. Show him some love in the comments. We greatly appreciate that, family. Let's now dive into our feature story of the day and discuss this $1.9 million Bitcoin price prediction. We're going to dive right into this tweet right here by Luke Broyles. Shout out to Luke on this post. It's very insightful. I'm going to read it for you from start to bottom. Here we go. He wrote, Bitcoin is going to 1.9 million per Bitcoin because of the Ethereum disaster. This Ethereum disaster. Why? Let's break it down. The problem with Ethereum is not how many ETH tokens are issued. The problem with Ethereum is that the number of tokens that can be issued may be changed at all. The Ethereum Foundation is the Ethereum central bank. That's fact. I am not anti-ETH. I am anti-central bank. If ETH decided to not have a central bank, I'd have no problem with it. However, who decides to dissolve the central bank? The central bank? If the central bank or the masses has the power to destroy itself, then does it have the power to recreate itself? If a monetary system can be exploited, it inherently will be exploited. The reason Bitcoin works is because it had no central bank, foundation, or CEO from the beginning, and it was designed to not be possible to create. This is why many call the monetary immaculate conception. Either your monetary system is controlled by humans or it is not. This is binary, yes or no, 0 or 1. ETH policy is a yes to human oversight. Bitcoin policy is a no to human oversight. Many supporters of Ethereum think Bitcoin enthusiasts are being needlessly negative about ETH updates because Bitcoin advocates simply don't understand a given new gizmo is better. It doesn't matter if it's better. The fact you can determine what it is better or worse is the problem in of itself. You cannot innovate new changes into improvement when the precise problem you should have been solving in the first place is to achieve immutability where the need to change is irrelevant. I am not hating on Ethereum baselessly. If the Ethereum people loved Ethereum so much, why wouldn't it, or they wouldn't change it so much? I think he makes a great point there, as their actions of changing it are precisely what dooms it. I lost a lot of respect for ETH personally. This is JV speaking. When they switched their protocol from proof of work to proof of stake, it changed everything. And I was like, if they can change that, that means they can change anything else to do with the protocol. So how can you trust it? I lost complete trust for Ethereum when that happened. Now, here's some facts. ETH had pre-sale of tokens. The ETH Foundation had to be set up in certain jurisdiction. The ETH Foundation determined the price pre-ICO days. The ETH Foundation manipulates the price post-ICO days. ETH has the ability to kick off the validators. ETH has the ability to censor transactions. The largest ETH stakeholders have the largest vote. Core developers haven't been comfortable staking ETH. That's a red flag. ETH Foundation invites CBDC as adoption. Suckers. ETH has changed monetary policy numerous times, and ETH changed consensus, as I mentioned earlier, from proof of work to proof of stake. So in summary, I don't blindly subscribe to the Bitcoin cult. Instead, I have conviction that single points of failure are inexcusable. Bitcoin may have single points of failure. However, I am yet to see any. ETH, on the other hand, has numerous single points of failure. And this improvement proposal from a single point of failure to reduce the risk of single points of failure is both ironic and useless. In summary, Ethereum is a political currency system, and the Ethereum Foundation is the central bank of political power in the system. I'm going to read you that one more time so it sinks in. Ethereum is a political currency system, and the Ethereum Foundation is the central bank of political power in the system. Why does this mean Bitcoin? Does this mean it's super cheap? The addressable market for monetary system outside of human control is theoretically infinitely larger than one with human control. Example, the addressable market for this metric system is 100x larger than the qubit system. Ethereum is currently valued at 400 billion. Perhaps one could argue ETH has some use if they decided to trust the people behind it. The Ethereum qubit system works as long as you trust the members to be honest about the length of their forearm. Let's upgrade to metric. If Bitcoin as a system of measure were to be worth 100x more than ETH, that is a 40 trillion market cap or $1.9 million per Bitcoin. Forget all the other digital tokens, forget gold, silver, and land. Forget all political currency systems. Simply by this principle of ETH market cap alone, one realizes how incredibly undervalued Bitcoin is. Preach. This is not to say that ETH is going to zero anytime soon, nor is it to say Bitcoin is going to 1.9 million soon. This is to say that if a digital network with single points of failure can be pumped up to 400 billion, how dramatically could Bitcoin be revalued upwards? If the ETH qubit system may be valued at 400 billion, how extremely undervalued is the metric system? The metric system works because it is a specific fraction of the speed of light. The number is irrelevant. The constant is all that matters. Likewise, the number of Bitcoin monetary units is irrelevant. The only thing that matters is finite immutability that we don't technically know how to change. We know how to stop an asteroid from hitting the planet. We don't yet have the technology to crack Bitcoin immutability. Read that again. I'll repeat it. We know how to stop an asteroid from hitting the planet. We don't yet have the technology to crack Bitcoin immutability. When people realize the length of a meter cannot change, they will understand that measurement system is worth orders of magnitude more than qubits. I wish the users of the Ethereum qubit system all the best, but I hope they understand the metric maxis are not resentful for their qubit system in particular. They are against human-run measurement systems as a whole. Bitcoin will trend up in all political currency systems with single points of failure indefinitely. The fact political currency systems like ETH, the peso, or the dollar are all still valued so highly only highlights the undervaluation of Bitcoin. That's pretty deep. If you adopt the system without single points of failure and you succeed at eliminating your personal single points of failure, you are set. And I'll leave you with this. Ethereum is only one qubit system among many. 1.9 million USD is nothing for Bitcoin. Protect against aggressive and rapid repricing. Eliminate single points of failure now. That's a very profound post. So respect, and again, to Luke Broyles for actually sharing that. It's actually very intriguing of a breakdown. And also, if you're not familiar with ETHgate, I highly encourage you to check out this video James O'Keefe recently dropped. I retweeted it over on X, and it breaks down ETHgate. ETH, from the inception, the real creator, which doesn't really get the credit for creating Ethereum, he designed it to be decentralized. However, other mofos came in the picture, like Joseph Lubin, Vitalik, Buterin, whatever. And they changed the protocol, clearly colluding with the powers that be to ultimately destroy it and control it. And so because it's controlled, do you really trust the people behind it that can change it? Do you actually trust the fact that Ethereum has a infinite maximum supply and they are their own central bank and they can print unlimited amounts of Ethereum if they choose to? If you trust that, so be it. Teach their own. That's your choice. But this just makes the Bitcoin maxis and those who are in Bitcoin that much more bullish because, as Michael Saylor once said, there is no second best. There's a crypto asset called Bitcoin, right? Like real talk.
Which one's the best crypto asset? Well, Bitcoin's the best crypto asset. Okay. What's the second best? There is no second best.
So you already know. Let me know your thoughts with Bitcoin hitting $1.9 million per coin. And do you feel the Bitcoin is undervalued at today's price of 67,000? And where do you feel the Bitcoin price will likely be within the next couple of weeks leading into Bitcoin halving 2024? And where do you feel the cycle peak will be for this particular cycle? Do you think we hit 500 Gs, 300 Gs, a modest 200 Gs, or a bullish $1 million per coin? Holla.